The 2024 US presidential election is poised to significantly influence not only the US economy, but also global financial markets. With Donald Trump representing the Republican Party and Kamala Harris as the Democratic Party's frontrunner, the election will shape the nation's leadership and its key economic policies for the next 4 years. Each party presents distinct views on critical issues such as taxation, government spending, and foreign relations. Forex traders are closely monitoring this election as it historically impacts currency markets. The US dollar, along with major currencies like the euro, EUR, and Japanese yen, JPY, often experiences volatility based on shifts in US policy and global market sentiment. For instance, the dollar saw upward momentum following Trump's 2016 victory, while Biden's 2020 win led to a market response that weakened the dollar. While past performance in financial markets and election cycles can provide insights for trading, it does not secure future outcomes. As election outcomes unfold, traders analyze these trends to inform their Forex strategies, anticipating potential market volatility driven by political uncertainty. Since the 2020 elections, financial markets have been impacted by shifts in political sentiment, rising populism, and increased political division, leading to uncertainty and decreased trader confidence. Inflation and recession fears prompted central banks, like the Federal Reserve, to tighten monetary policy, increasing market volatility and slowing economic growth. Although inflation has declined since peaking in 2022, public perception remains high, influenced by political biases. Recent market sell-offs reflect heightened recession fears, despite some economists suggesting these concerns may be overstated. Rate cuts and favorable earnings reports could stabilize markets. Geopolitical risks, such as conflicts in Ukraine and the Middle East, add complexity by disrupting supply chains and raising commodity prices. The 2024 US presidential election and elections in other major countries could trigger policy shifts affecting global trade, highlighting the need for stability in the financial system. Key candidates and their economic policies. Understanding the US presidential election. The US presidential election influences global markets, including Forex, stocks, and commodities, due to its impact on economic policies like interest rates and trade. The election outcome is unpredictable, leading to market volatility as traders adjust positions based on anticipated policy shifts. Democratic Party Kamala Harris, the Democratic nominee, supports continuing Biden's economic policies, including social spending and infrastructure development. Her platform may lead to increased government spending, potentially weakening the USD while stabilizing international trade relations and controlling inflation. Republican Party Donald Trump's platform emphasizes tax cuts and deregulation. His policies could strengthen the USD initially, but may lead to volatility due to trade conflicts and reduced government spending. While deregulation might support short-term growth, long-term stability could be at risk.
In this context, Donald Trump argues that the Fed's decisions might favor Democrats by boosting economic growth before the election, whereas Kamala Harris advocates for maintaining the Fed's independence. However, as the election approaches, the market's expectations of further rate cuts are linked to potential election outcomes, causing heightened volatility in Forex markets. Trade and foreign policy. Kamala Harris prioritizes USMCA promotion, trade law enforcement, and restricting China's access to cutting-edge technologies. Whereas the self-styled tariff man, Donald Trump, is in favor of increasing import duties to 60% on all goods, especially ones coming from China. International economic relations may be impacted by his belligerent attitude, which could lead to trade wars. Forex markets are directly impacted by these trade restrictions, especially those in developing nations. Debt and fiscal policy. Due to ongoing deficits, the U.S. national debt has grown quickly since 2001 and currently surpasses $35 trillion. Donald Trump and Kamala Harris, the presidential candidates, suggest increasing spending by trillions of dollars. In the FX market, large deficits could cause the USD to drop, causing traders to worry about the sustainability of the debt and potential downgrades in credit ratings. Both candidates emphasize the economy, but handling growing debt and interest rates will be difficult to implement in the future, particularly if the United States' creditworthiness deteriorates and affects the world currency market.